Can we battle COVID-19 and climate change simultaneously?
Well, the short answer is yes, and the long answer is, of course, the devil lies in the details. So, ideally, we would devise green bond programs to refinance the fiscal response uh, that is now being coordinated on local, national, and supranational levels. But there is a couple of and thereby we do two things. We would pay into our environmental account, and we would take care of the social on the buy, as it were, because it is a fiscal expansion, and that should help the economy, and commerce is probably the most important social interaction that we have. So, but there are a couple of points that make this difficult. One is, of course, in the short term, we need to have those fiscal funds distributed very quickly. That means we don't have time to try and put an environmental agenda towards those programs. And then, secondly, it is very simple to bring a program that is designed to help economically hard-hit areas, regions, and businesses, and to bring that into a social umbrella, or under a social umbrella, as it were. It is difficult to combine that with environmental goals, and the two may not coincide. So so there's another area of complexity. I believe that the 500 billion program, or sort of recovery fund, that France and Germany are at the moment proposing on the European level, is the most promising arena to try and put those two aspects together, and to see how we can use the money spent from a fiscal angle to alleviate those negative repercussions from the pandemic, and to bring those to work in an environmentally sensible manner, so that it also pays into the green and environmental goals under the United Nations SDGs.
And how does the crisis impact issuance activity?
We've seen, of course, a large increase in the SSA space, 63% year on year. Close to 400 billion is now being issued. If you take out the government part of SSA, we're still up about 25%. Over 170 billion has been issued this year. And the Deutsche Länder, so the German states, have been very active with a program of 50 billion additional to their financing in the capital markets already, and they've been very quick in putting that to work. The corporate issuers have also been very active. They've put 40% on top of last year's issuance activity, year on year, and year to date, as it were. And I've been very impressed with how calm and composed all these corporate treasurers are in the face of completely disappearing, in some cases completely disappearing revenues, and how they really grab the bull by the horns and translate that into capital markets activity. Now, those elevated levels are going to stay with us for a while. We won't be able to see revenues pick up either fiscal revenues, or indeed revenues in corporate businesses to pick up so quickly that it's going to be a quick payback or repayments of these additional debts easily. We've seen on the FIG credit side same issuance as last year, more or less 130 billion so far. But if we look at the covered space, of course, one answer to the measures that the ECB took was that many issuers have decided to keep retained covered bonds and not issue them in the market, but rather give them to the ECB for the TLTRO3. that TLTRO3 will run out end of June. We'll have another window in September. We see that the spreads are now coming back in the market, so it is more conducive to get the longer term financing in through covereds, and we would expect that to pick up again in the course of June and July. We will get a little dip in the issuance again, but that volume of about 30 billion that we haven't seen, that's lost permanently. And so we would expect that we get from 120 billion down to 90 billion in terms of benchmark issuance this year.